Hello and welcome to the Expat Property Portfolio. I am your host, Calum Williamson, and I'm joined again by Arjun Kumar of Taxed. Arjun, how are you?
Thanks, Calum. I'm good, thank you. I'm good. It's been a long couple of weeks, but I'm glad the autumn budget's over. It was chaotic in the UK.
Yeah, no, I can imagine. It's sort of I was just going to bed as it was sort of kicking off yesterday, so I didn't see it till this morning. But yeah, we promised. I think it was about 2 weeks ago. We did an episode on how to set up a company, the benefits, case studies, that sort of stuff, and we promised we'd do a flash sort of shorter pod on the budget and what we think the impacts are. So that is what this is. Let's get straight into it, shall we? I mean,
Let's do it. Let's do it.
what are your initial thoughts? Did you watch it live? Did you watch it anxiously, nervously? Were you happy? Were you sad? I mean, what was your sort of overall feeling on it?
So I think, the wider UK scale, it's quite interesting because they were saying this is going to be the budget for growth. They did their kind of tax rises last year, and then in the UK kind of media anyway, right? There's been leak after leak. Literally every week, there's been a new leak. There's been this income tax rise. There's been the mansion tax. There's been kind of landlords getting hit. Every week has been something new. So to be honest, it was just like a sigh of relief. The whole team, we had it on screen and everyone was watching it. But it was funny, 1 hour before we had it just switched on, it got leaked. The whole budget was leaked an hour before. So the market started moving and then everyone kind of knew what was going to come. So it kind of took away from some of the immediate impact. But I think there were parts of it that certainly do impact some of the conversations that we were having. For example, a couple of weeks ago when we were discussing around setting up a limited company, the process around it and some of the tax efficiencies, I think that's been further um, becoming more important with the increase of 2% tax on your rental income and with fiscal drag. So those two key changes are going to impact a lot of landlords that are living overseas.
And so what do you mean by fiscal drag?
Fiscal drag is a technical term for essentially saying that everyone's going to pay more tax because they are freezing thresholds.
Yeah.
So as an example, right, when I started in the tax world 10 years ago, the personal allowance was £12,000. Now, with inflation, that should be around £16,000 now if you track it every year. But we're at 12,570. So it's not really gone up with inflation. So what that means in effect is although rents might have increased, and therefore from a landlord perspective, the profit that the landlord is taking in and what they're being taxed on has also increased. But their personal allowance, if they are due a personal allowance, isn't changing. So then there's going to be more tax to be paid. Now, that will impact a lot of landlords who are making a profit. And then separately, the increase of that 2% is going to mean that more of these landlords are having to pay more tax.
So,
Just the extra 2% can make a big difference.
sorry, and so when you say, was it fiscal drag, you said?
Yes, fiscal
Is
drag.
that basically another way of sort of saying a stealth tax? Because that is what I sort of thought it was, right? Is the fact that you're not increasing the allowances or the limits, so therefore I think it's up to 2030. She said, right? It's frozen until so. Therefore, as
2031, yeah.
2031, so as wages rise and as people earn more, you'll naturally creep into higher and higher brackets. So as you say, it's sort of way of earning. It's a soft way of bringing in more tax money without actually saying to people, look, we're putting up your taxes. So just if we can just
Exactly.
just rewind a second, I think the sort of two things you touched on there were obviously there's a lot of things in the budget, but the two things I wrote down that could be sort of overarching elements you need to look out for as a property investor or as a property owner. Three things, but two are really key to property investors. The first would be the freezing of the tax thresholds, right? Fiscal drag.
Yeah.
I think naturally that will cause you to pay more tax. So I'm thinking, I have one property in my own name. That's right on the threshold. It's earning 1,100 a month, so therefore just over. So that will mean I'm paying more and more tax. And then the other one, I think, is the key, is what you said there as well. It's the extra 2% on, is it dividends, property income, and savings income, or
Exactly that. Exactly that. So it's across all types of investments. So I guess the Labour government have seen from their perspective, not taxing working people is their key phrase, but not looking at yeah. So they're saying
But
it's not
that's
impacting
good, isn't it?
employees.
You pay tax on the money you earn, and then you invest it wisely to try and earn some more money, but then you pay tax on that as well.
And then you get hit again. Yeah, it's like a cycle. But then it further increases that need for setting up that limited company. I think in these cases, right, especially if you're living overseas, if you've got property in your name, you're going to be hit by 22% tax, and then it could go up to 42%, right, if you've got three, four, five properties. Whereas if you do look at setting up that limited company, you're paying tax at the 19, and then the max is 25% if your profits are over 250K. Um, that gives you a bit more flexibility because then you can take out your dividends tax free as being kind of disregarded income, provided you have no other income in the UK. So if your strategy is to invest in over time, kind of build up multiple properties, it's probably going to look like a better option to set up through a limited company from the get go and take advantage of those kind of disregarded income rules. If you've got both, okay, then you might be in a bit of a tricky situation.
Yeah,
I think this does further push people
it,
towards that limited company structure.
for sure. And I think that's the key here, right? Is actually, if you were going to ask me, go on, you ask me, Callum, what do you think of the impact of the budget for UK, not UK based, but people investing in UK property? Ask me, and then I'll give you my answer.
So, Calum, what do you think about the UK budget and how it's going to impact overseas investors?
I don't think it is, to be honest. I mean, if you set up, and this is my main thought, is well, actually, all of these things, the freezing of the tax thresholds, the the extra tax on property income, it's only impacting you if you own in your own name, right? So the way you mitigate
True.
both of those, yes, there's the third thing I wrote down that would impact property owners, which is the mansion tax, 2 million quid plus, then you pay 2.5 grand up. I mean, the only people that's going to be impacting, and we actually made a meme about it, but we didn't post it on Instagram yet, is the poor baby boomers, people that bought a house at, I don't know, 500,000 quid or 1 million quid or whatever it is, and it's now sort of well over 2 million, and a lot of those people, to be fair, are asset rich and cash poor, so that's a lot of money. But I think if you're buying
Yeah,
investments, you're not buying, unless you are ultra wealthy, but even then I wouldn't suggest buying 2 million quid plus investment properties. So that's not really going to be impact anyone, right? So let's take that out. So you're left with dividends, the savings, and the property tax going up, and the freezing the tax thresholds. So you buy via a limited company, that's all gone, right? As you said, it's 19 or 25%, depending on your profits. You can still deduct the mortgage costs from your tax bill. My only concern would be, there's people far smarter than me in government looking at this. My only concern would be that at some point in the future, after they pushed a load of people into companies, that they then
yeah,
change the rules there. That would be my only concern, but that's just speculating and trying to sort of look in a crystal ball. But really, yeah, I don't think if you're buying going forward, buying a company structure, and it's not that big of a deal, I don't think.
true. I completely agree. And agreed as well with the concern that potentially it could be hit in the future. But I think the way that it's going at the moment is it's a great way to invest. But I think as well, it's trickier to hit companies in that regard because of the way that it's reported. Like, for example, if a company has rental income plus some trading income, how are they going to differentiate between the two? Maybe they'll set up new tax returns for kind of property companies, but we'll see.
Yeah,
But no, yeah, I agree. I think it certainly seems like if you're investing through a limited company, this budget really it doesn't affect you.
yeah, yeah. And I think as well, you sort of actually, I think sort of longer term, I'm not sure whether they will penalise people that own via a company. I think actually the government wants more people to own via a company because it's actually transparent. If I own a property in my own name and I just you know keep my mouth shut and keep my head down and decide not to report it, then that's obviously a decision, which obviously I don't do.
Yeah,
Yeah, but we spoke about it last time. I've got the big tax document I've been carrying around with me. It's sort of like that thick, but you can, whereas you shouldn't, but you can. Whereas within a company, it's pretty crystal clear, and actually, I think it's an easy way for them to generate revenue. But that's another conversation. Any other points you found interesting, or anything else you think sort of? Obviously, we're trying to keep this one a little bit shorter. We'll put it out tomorrow just as a sort of overview for people. But yeah, is there anything in there? Obviously, there's heaps of elements to look at, the impact on the economy, all of this sort of stuff. But I think,
Yeah.
just from a purely property investment perspective,
So I think another one that might impact overseas investors is the changes to national insurance. So I know there are some changes from like a UK perspective, salary sacrifice, that's not going to impact overseas investors, but voluntary national insurance contribution. So this will certainly impact any expats who have left the UK, who previously were working in the UK. Now, the rules now suggest that you can't pay Class 2 national insurance, and Class 2 is at a lower rate. So you're able to kind of top up your qualifying years, obtain the state pension at the lower rate. Now, the rules suggest you need to have worked in the UK for a minimum of 10 years to be able to even qualify. And then you must pay Class 3, which is a little bit more. So that change impacts a lot of the Brits who have moved overseas.
That's big for sure, because when I'm out and about meeting people, a lot of the time the sort of conversation is around, okay, buying property to create a pension, right? And
Exactly.
if you're a Brit, one of the super easy ways to add 200 quid a week or whatever it is at the moment, or come 67, is those class, was it C or B, 2 or 3 voluntary payments, right? And then you sort of, as long as you've got, I think, 35 qualifying years, you can back pay 7, you get the full thing. Which is worth doing, because effectively for now it's free money, right? But that, I remember reading that earlier this morning, and I thought, that would impact myself, for example.
Yeah.
I didn't even work in the UK for 10 years. So now I wouldn't be able to do that myself. So I think it would impact quite a lot of people.
Yeah. Yeah. It is a big change. But I think aside from that, the primary updates seem to be more on the UK side, but I think we've covered some of the key ones that will impact investors that are looking to invest in the UK from overseas.
Okay, well, look, I think I know we can always bang on and talk about things, but I think sort of 12, 13 minutes there. It's a good screenshot, I guess, just to sort of summarize, snapshot, just to summarize, freezing of tax thresholds until 2031. So fiscal drag or a stealth tax. So if you own in your own name, you'll end up paying more over time. The extra 2% to dividends, property incomes and savings from 2027.
2027, yes. So it's 2027 for the rental income, 2026 for if you're taking out a dividend.
Okay, and the way you can mitigate both of those is owning via a company. And then the last one would be the mansion tax. But if you're buying buy-to-lets at 2 million quid plus, then, you can afford 2.5 grand. So I don't really feel that sorry for you.
Perfect. That's a great summary.
Anything?
That's good.
Anything to add?
Just the voluntary national insurance. I guess if you are a British expat and you're living abroad, maybe check your number of years that you have worked in the UK to see if you still qualify.
Okay, yeah, and we'll put a comments or notes. We'll put a link to the government website where you can check that, and then Arj will also put a link to your website or your email. What would be best, and then people can get in touch with you if they want to have a chat about sort of the company setup and all of that sort of stuff.
Send us an email and we're happy to chat.
Okay, Arjun, thank you very much.
Lovely.
I appreciate you giving up
Thanks,
your time.
Calum. Thanks for having us on.
Cheers.
Thank you.